We've been in the post-pandemic housing market recession as long as we were in the pandemic boom, 2.5 years. As we look into 2025, the question everyone is asking is, do we have a new era starting? Does the housing market start to get back to normal? There's only a couple more weeks in the year, so I'm looking toward 2025 now. What can the data tell us about the signals for growth or weakness after the new year? We know that inventory has been climbing all year. The number of unsold homes on the market is getting closer to 2019 levels finally. We know that sales are inching up too. Anecdotally, I've been hearing about home sales picking up in November and in December. The MBA's mortgage applications data has been surprisingly strong. Our home price data is still trending higher than last year too. Home prices nationally are up 5% over last year. That's a pretty normal amount of price change. The market change isn't evenly distributed. However, the northern cities have tight inventory and rising prices. Some of the Sun Belt cities have the most inventory unsold in many years, and some markets have even falling prices a tad too. This week, Thursday, December 12, is our monthly webinar. We already have lots of signal for the data for the first quarter 2025. So we'll spend an hour looking at how next year is shaping up for the housing market. We'll spend a lot of time with the local and regional differences too. So that's this Thursday, December 12th at 10 a.m. Pacific. There's a link in the description below to register for that webinar and save your space. At Altos Research, every week we track every home for sale in the country, all the pricing, all the supply and demand, all the sales, and the changes in that data so that you can understand the changes in the U.S. housing market immediately as they happen. I'm Mike Simonsen. I'm the founder of Altos Research, and let's take a look at the data as we're now in December 2024. So let's start with inventory today. There are 690,000 single-family homes unsold on the market around the U.S. That's 26% more homes on the market now than last year at this time. It's now only 17% fewer homes on the market than at the end of 2019. So we use 2019 as sort of a proxy for normal times before the pandemic craziness hit, even though the unsold inventory in 2019 had been declining for most of the previous decade. So the 2010s, interest rates were very low for basically the whole decade, and that encouraged Americans to buy and hoard real estate. Inventory shrank every year for most of that decade. This is the 10-year view of inventory in the U.S. Notice how basically every year over the last decade, we've had fewer and fewer homes for sale. During that time, mortgage rates continually moved lower. We continually bought and hoarded more and more homes. So that shortage reached its crisis peak in January of 22. Then in the last 3 years, at the right end of the chart, you can see that with each year with more expensive money, we're slowly emerging from the crisis and growing the amount of unsold inventory. So now just under 700,000 homes unsold on the market. In 2019, there were about 850,000 unsold homes on the market in December. Interestingly, the growth in the available supply of homes in the last 3 years has come from weaker demand. When demand slows, inventory grows. Supply growth could also come from more sellers. And maybe this would be like from investors unloading, or maybe distressed borrowers who need to take, to unload like they did in 2008. So in this cycle, though, in most of the country, we have none of that growth coming from the seller side. In Florida and Texas, we see rising costs of insurance and taxes and climate risk driving some more sellers. So in those markets, we see reduced buyers and slightly increased sellers. So I'll show this in the webinar on Thursday, but you can see a city like Dallas has new listings each week, getting back to normal levels. And we can contrast that with a city like Chicago, which still has very few new listings each week, just barely more than the record lows of the pandemic. So in 2025, we expect that to even out, normalize just a little bit more. So nationally, there were 31,000 new listings for single family homes for last week, which included the Thanksgiving weekend. So we've been averaging about 8% more sellers each week than a year ago. Thanksgiving came in around the same trend. So with 8.7% sellers, more sellers than the same week a year ago. So sellers are growing by 5 to 10% per week. We expect that growth to continue in 2025. The new listings data is purely the supply side of the supply demand equation. So in this view, I'm showing 3 recent eras of the housing market as told by the new listings data. Each bar is a week over the last 9 years. The taller the bar, the more sellers, newly listed homes for sale in a given week. Each year forms its own little bump. More sellers in April, May, June, July, with each year with fewer sellers in the fall and winter. And then it starts again. So at the left end of the chart is the pre-pandemic era, which ended in March 2020. That era was characterized by roughly 90,000 new listings for single-family homes each week at the peak of the spring season. The bars were the tallest back then, indicating how many more sellers each week that we used to get. The pandemic boom took off in April 2020, came to a crescendo in that Q1 of 22 after a 2-year buying frenzy, and then hit an abrupt halt in July of 22. So during this period, there were fewer sellers and many more buyers. As money became super cheap, we bought more homes and sold fewer. So that's the light colored section in the middle here. Rather than 90,000 sellers in a given week during the pandemic, that dropped to 80,000. Meanwhile, we were buying far more homes than that each week, and the unsold inventory fell down to those crazy record lows. Now we're in the post-pandemic era, which we've colored here in blue. Each week has very few sellers, but lower demand means longer time on market and growing inventory of unsold homes. During the post-pandemic era, the supply of new listings each week has been around 70,000. If you look closely at the right end of the chart, you can see that 2024 had seller growth, about 8 to 10% more sellers each week than a year ago. And we're looking for 2025 for that growth to continue. I don't see it getting back to the pre-pandemic levels like 90,000, but hopefully we're at 80,000 sellers per week in our peak spring-summer season 2025. The growth in the number of sellers each week is generally healthy for the U.S. housing market because more sellers implies that more sales can happen. It implies that there is less upward pressure on home prices, which helps improve affordability as incomes grow to catch up with home prices over time. It gives buyers more selection and less pressure. So as we start the new year, the number we're looking for in the new listings is about 50 to 55,000 new listings of single-family homes per week by the end of January. 50 to 55,000 is what we're looking for. That would be a good sign for a growing market for the year. Now, there are slightly more sellers than a year ago, right? We can also see home sales growing just a bit. Home sales are running ahead of last year's pace by approximately 10% per week. In fact, the headlines are starting to catch up to the data. So there are a few points like NAR's latest estimates of home sales and the MBA's mortgage applications, which are starting to corroborate our data that home sales have shown some growth over 2023, and that has not abated in December. The market has been averaging 51,000 new sales pending each week over the last 4 weeks, including the holiday. So that's down from 54,000. It's totally normal, of course, to have fewer sales, offers, and sales happening in December. Like I said, by our counts, home sales are running maybe 10% above 2023. Now, it's not a lot of home sales, but it is an improvement. The fourth quarter of 22 and 23 were very disappointing on that front. So as we're looking into 25, it seems like there has been some late year momentum. Maybe it's like from buyers who waited until after the election and are now ready to act. Will that momentum continue into the spring? It's hard to say, but like the slight growth in new listings, seeing a slight growth in home sales is an optimistic view of the housing market. It feels healthy growth. Now, I want to point out that there are no signals of a big surge in home buyers. Even though there are lots of potential home buyers who have put their homes on hold for the last 3 years, some of them are starting to move now, but there's no sign that a lot of them will dramatically change the trend in the post-pandemic era. Slight growth, but not explosive growth for home sales in 2025. This is why we're talking about normalization. Now, home prices nationally continue to hold up over last year. The median price of single-family homes in the U.S. is now $384,900 this week. This is the median price of the homes going into contract each week. This is what people are buying. Even though the price ticked down with the latest data, the low volume over the Thanksgiving weekend, home prices continue to be up about 5% over last year on average in recent weeks. I like tracking this number, the price of the newly pending sales, because it's the easiest proxy for future sales that are going to happen. These are the sales that are started. They'll close later in December or January. Home prices by this measure have appreciated by about 5% this year. That's more than I expected given how weak demand was earlier this year. When we look at 2025, we're forecasting that home prices will grow less next year than they did this year. So our expectations are for 3.5% home price gains in 2025. It's kind of fascinating how it's easier to temper home price expectations lower than it is to predict big home price gains. So in this last year, we expected essentially no home price gains, and the market surprised higher. So in 2025, we're expecting some home price gains, but less than this year. So we'll see if the market surprises again. But essentially, we're expecting softer home price appreciation in 2025 because we have more inventory of unsold homes. Some markets have a lot more inventory, and the cost of money hasn't shown any signs of significant improvement. So if you're in the camp of people waiting for home prices to crash before you swoop in for a bargain, you should be aware that there are no signs anywhere in the data of home prices crashing. There are some southern markets like Tampa, which definitely have challenges ahead for the year, and probably some bargains to be found. But those are slight price declines overall and not market crashes. We'll spend more time with the pricing in the local markets in the webinar on Thursday. When we look at the leading indicators of future sales prices, we see stability and not much negative pressure. Again, if you're waiting for a big price correction before you finally pull the trigger to buy a home, there's just no signal in the data that a price correction is imminent. It's now the middle of December. 38.4% of the homes on the market have had price reductions from the original list price. That's easing lower as we end the year. After the new year, fresh new inventory gets listed, and so the percent of homes with price cuts falls. In this view, the red lines are the three most recent years. This year's curve is shaping up like how 2023 ended. And at the right end of the chart, you can see how the two lines are converging over the same curve. With just under 40% of the homes on the market, this is consistent with the expectations for the holiday season. Every market has price cuts. It's normal for about a third or 35% of home sellers to cut their asking price before they get an offer. This level of price cuts now, 38%, reflects slow demand we've had all year. Price cuts have been stable for several months, though, which indicates that even after the hurricanes, for example, there's no signal of significant softening on home prices. The curve here, the dark line, is 2024, and it's easing down as you'd expect for the year. So if you need to communicate about this market with your buyers and sellers, you should join us at Altos Research. Go to altosresearch.com, book a free consult with our team. We'll help you dive into the local market and help you start communicating, understanding, and talking to people about this housing market with your buyers and sellers today. So link below for that. Join us. We'll see you soon.